Rohr here with an early concise highlight on Friday, April 24th, 2015. It's currently 6:15 a.m. U.S. Central Time, and we're coming to you a bit earlier than usual today because we want this up well ahead of the U.S. durable goods, the last economic data of the week. So what has all this meant to the markets? Well, as you can see from the S&P hourly on the left and the 30-minute on the right, all the week data, market once again didn't really care much. We look at yesterday's activity and it stalled around for a little while after probing and slipping just temporarily, just a bit of leakage below the 2090 to 88 area yesterday, but not ever closing below 2088. Once it got the bid back, actually finally not only pushed up into, but by mid-morning into lunchtime was pushing above the low 2100 area and even above the old contract all-time high up at 2107, where it came back to settle. However, this morning it is up a couple bucks at about 2110. So anything that doesn't represent some slippage back below settlement here at 2107, it is still saying if it's out through that, it's probably going to try the more major lead contract high up at 2117.30. So that's going to be very interesting as the next sort of level at which the market needs to get through. Now, that said, we'll see on the intermediate term charts the way that the 41-week average has moved up to about the 2020 area. Therefore, anything up into 2120 to 25 is actually oscillator resistance now, very near at hand, quite unusual. But that said, as long as it's pushing up today, it also is still demonstrating where the hourly MACD is out above the upper runaway band, even though 30 minutes slipped modestly back below it. And if the hourly is out above the upper runaway band, it means the market can feed on itself. So even if anyone were thinking about it topping for now, you'd need to see enough weakness to diffuse this typically strong indication. Much like we saw going back onto the 15th, when the market was out to the upside but then slipped back below it, and that was a precursor to the nasty opening a week ago on last Friday morning. So that's going to be a key view that we have to keep an eye on. And that pretty much does it for the short-term view of the S&P 500.